Good morning, everyone. Thank you for joining us today, and welcome to this educational presentation. Now, today I'd like to ask the question, are you still missing the big moves? I think most of you will probably answer yes, because that's probably the majority of emails I get from students and prospective students that they're saying, Steve, I just can't capture these big moves. I see stocks that are priced around 25 cents, 50 cents, and in a matter of days, they're all the way up to $10, $20, or else even a stock like Tesla, where it will double in value. You miss a lot of these big gainers. You don't understand why. One of the main reasons is because we get in our own way. Usually the justifications for either buying or not buying is what stops us from capturing this big moves. It's not so much a strategy or not so much a technique or market. It's actually that we're kind of getting in our own way by overthinking a lot of things. For example, let's look at this chart in Tesla, which we just talked about. Let's say you were interested in it when it was kind of going sideways in November, just 2 or 3 months ago, and you really wanted to purchase it. Maybe you did your research, you really liked the company, you liked the direction they were headed, and you thought maybe you'd buy some options, maybe some calls or some type of spread with an upward bias. And then all of a sudden, it takes off in the next week, and you say to yourself, well, gosh, I missed it. I didn't think it was going to act this way. I thought it would be a little bit more orderly. I didn't like when it gapped up like that. And now I went to that chat room, and now the guy says that it's overbought. So what I'm going to do is, I still like the stock. It's a little bit too high, so I think I'll wait for it to come down. And then when it gets back down to lower levels, that's when I'll buy. So you have a plan in place. You're going to wait, and then this happens, right? You see Tesla just go right back straight up, and it's making new highs. Okay, this is coming into the first week in January. So you ask yourself, are you still missing these big moves because you really wanted to buy this? It just kind of got away from you. Well, I'm going to teach you the entry rules to one of our most consistent strategies that is specifically designed to catch these trending moves. And even if you thought you missed it, it would have generated a buy signal right here. And potentially you could have captured upwards of 350 points in just 1 month. So you're going to get all the entry rules. I'm going to explain exactly how to trade this for entry, and you'll be able to apply this as early as Monday if you like. Now, I know a lot of you are saying to yourself, well, Steve, I don't have all the tools and techniques and education that you have. It's a little bit difficult for me. I haven't been trading that long, or I really am not a big strategy trader. I just kind of go off my own wits. I just kind of get an idea. Well, that's why I developed with Proprietary Strategies the PTS Primo charting platform. This is the educational platform that actually teaches you how to trade so that you won't be missing these big moves. It really gives you that fair advantage. So this is going to be a great presentation today. Thanks for joining us on this Saturday. Welcome. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we are first and foremost an educational company. That's our only goal. We're not here to tell you what we think the market's going to do, if it's topped out or if it's going lower or if it's going higher. We're not here to tell you what we think the perfect stock is you should buy or the perfect time frame. We really don't believe in that. In fact, that goes entirely against our philosophy at Specialist Trading. Our philosophy as educators is simply to teach you high probability setups and to point you in the right direction so that the ultimate goal is you can make your own trading decisions. Now, I've been trading for 44 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist is someone who made markets in roughly about 50 or 60 stocks. So if you ever Google those old pictures back in the 20s and 30s, even up to the 60s and 70s, when I first started in the 70s, of all the guys on the floor screaming and shouting and making all these weird hand signals and with all the paper on the floor, those were floor traders, and the guys behind those booths that were buying and selling, those were specialists because they specialized in making a market in a particular stock. So if a floor trader wanted to buy or sell a particular stock, well, the specialist had to make a market and buy or sell that from them. So I did that for roughly 9 years. I made markets and traded through the crash of '87 and the bull market that followed. And so I've traded just about every market environment. I've traded just about every strategy, every system you can think of. Trust me, they've all been around before. I see so many things come out with webinars or with products where they say, this is a brand new system, it never fails. And then I go and do a little research, and it's something that, it's been around for decades. They just rebranded it. So our job is simply to educate you with the things that have stood the test of time, the things that really have high levels of consistency. So I share with you a lot of the things that I've picked up and traded with these last 44 years and things that I currently use in my own personal trade. You're going to see our attention to detail in trying to educate you today. But before we begin, as always, the law requires that we share this with you. So please take a look at our disclaimer. I'm going to show you a lot of performance results using the entry rules to this particular strategy. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, remember, we are first and foremost about educating you. If you'd like to get some more education on a daily basis, free education, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down. I post different information on a daily basis, little bits of financial wisdom, and also snapshots of current strategy signals or little techniques that we teach and explanations behind them. So there's a lot of great free education on our Twitter page. So please feel free to follow us on Twitter. So remember now, getting back to our goal, we are all about educating you. All right, there's no reason why you shouldn't be educated, because what most traders do is they say, well, listen, in fact, I get this almost on a daily or weekly basis from prospective students saying, Steve, why don't you just tell me what you're buying and selling and I'll just do the same thing. In fact, to be honest with you, I said the same thing to my mentors some 4 decades ago when I was really struggling with my own personal trading, when I was even on the floor of the exchange. And I said, listen, you guys have been doing this for a long time. Why can't I just buy and sell what you're doing? And they said, ultimately, because that's not the way you learn, and ultimately, that won't really do you any good. And the reason is because everyone has a different temperament. Everyone brings something new to the table, your own persona, your own trading style. For example, I could buy a stock, and I could go back and share with you the way I bought this and why the reasons were and how I've done this hundreds of times and how I have an overall winning average, teach it to you. And then you trade it, and I can almost guarantee you'd lose money. And someone would say, well, how can you lose money if you're making money doing the same things? Well, the reason is most of us have a different temperament. We have a different, some different risk parameters. Let's say after teaching you what I do, you realize that the risk is way too much for you to handle. In other words, you can't sleep at night. Whereas for me, it's easy. I don't care. Or you can say, gosh, this is too much. I have too big of a drawdown. It could be the opposite. Maybe I have a really small drawdown and I get stopped out, 7 out of 10 trades. But that's okay because my last 3 are big winners. For you, you may say, I can't take this. 7 out of my trades, I'm getting stopped out with a small loss. I feel like I'm not doing anything. And then ultimately, this will lead you to trading incorrectly. You'll say, well, you know what? I'm going to change the rules a little bit here to make me feel a little better. This way it'll give me more trades or less trades. Ultimately, you'll edit and alter things, and your results will be entirely different. So the point is, no two traders should ever trade alike. You should never go to a chat room or trading room and follow what they're doing. You should never, in my opinion, listen to these guys on TV and follow what they're doing. You have to find your own way. In my 44 years of trading, the only traders I know who are still trading, who are still consistent, are the ones that make their own trading decisions. So that's my goal. Not to force feed you signals the way some other websites do, not to have a system that automatically spits out buy and sell orders, but to teach you these high probability setups so that ultimately you can decide. A good mentor does not trade for you. He teaches you how to trade, and that's the goal at Specialist Trading. So you'll see that attention to detail in today's educational class. But a few things before we begin. Since this is a classroom, remember, I want you to ask me as many questions as possible, but I have upwards of 100. Oops, excuse me here. I got a little problem with my programmer. I have upwards of 130 slides to share with you today. So with that said, if I go into questions for every slide, we'll be here far too long. I don't want to take all your time up. So if you have a question, please wait till the end of class. I'll get to the questions then. The only question I will answer is this being recorded? Yes, it is. So if you have to leave early, don't worry. We will furnish each and every one of you a link to this recording, or even if you're having technical issues. A lot of times people say they can't hear, they can't see clearly. Oftentimes that's just your own internet connection. So if you log off and then log back on, oftentimes it'll be resolved. But if you're still having trouble, don't worry, you'll all get a link to this recording. All right, with that stated, let us begin today's presentation. So if you're worried about missing those big moves, we have a method that's specifically designed to catch them. Not guaranteed. I don't want you to think here that, oh, wow, so Steve's going to give me a method that never fails. I'm going to catch these big moves on Monday. No, it's just designed to do that, and it has a really nice consistency to it. This is strategy 3A. Now, I've talked about this before. It's a great method, very simple. I'm going to share with you some of the highlights of this. It's a continuation strategy. I know a lot of you are saying, well, what does that mean, continuation? Well, in other words, it's not looking to buy bottoms or to sell tops. What it's looking for is an already established trend. And because of the requirements, oftentimes when you think, well, the trend's over, it's overbought or oversold, it actually will generate a signal because it's stating that the trend is going to continue. And oftentimes this continuation is a big move. Now, the way it does this is by using a unique Bollinger Band setting. Very prominent, very popular tool. We're going to edit it and share with you some proprietary settings, usually reserved for the students who purchase Strategy 3A, but I'm going to share with you what those are today. That's designed to trade these quick, powerful trends in any market, any time frame, in any direction. So you'll see the majority of the examples I share with you today are stocks. But trust me, you can use it for anything. In fact, when we first started teaching this strategy, we really designed it just for the E-mini because that's where a lot of the trends were. When I first started using it, most of the stocks and a lot of currency pairs were kind of in a sideways downward mode. So intraday trading was really where it was at, and you'd get these nice intraday swings for these big moves. And we originally tried to teach it that way, but then students started telling us that, wow, this works great on stocks, on daily bars, weekly bars, works great on currency pairs, Bitcoin, commodities. So we realized it can be applied to anything as long as the requirements are met. As with all of our methods, you're going to learn the entry rules to this, but please, please, please paper trade first. So many students, when I teach this class, jump in too quickly, and I get emails saying, hey, Steve, this doesn't work. My first 5 trades are all losses. And then I ask for their work. They send it to me, and I look at the chart snapshots, and they're always entering the rules incorrectly. They're applying it differently. They're not using the correct rules that I teach. That's because you jump in too quickly. The way to resolve this is by paper trading first. Paper trade to see what works for you, to see where you're having trouble and difficulty, and then go back to the rules and check if you were implementing them correctly. Our edge at Specialist Trading and Pro Trader Strategies is consistency. Consistency has a different meaning than what most people think. Most people think it means, well, you have a strategy that has like 90% winners, right? Very consistent. No. Consistency is an awareness that you will have losses. It's entirely different from what most people think. So you say to yourself, well, what's so good about that? I'm going to have losses then? Yes, because a consistent method is one that's able to recoup those losses. You see, that's what sustains you. So many traders are looking for the huge home run, the big move where, gosh, you make a killing, and then every other trade is going to be a killing just better than the last, okay? That's not what will sustain you, because most of the traders I have known that have traded methods like that have mostly been all blown out. They've all lost everything. It's like that old phrase, the brighter the sunshine, the darker the shadow. When you're trading these high flyers that are guaranteed to make you these big home run moves, most of the time the risk is really great. So it's just as easy to fail. What we want is a method that's consistent, a 2 steps forward, 1 step back approach. The 1 step back meaning that there will be and are losses. That's okay. You want a method that's able to recoup those losses. That's what consistency means. So that way you can look back at your profit and loss statement and see you have this nice upward slope. That's what we teach in all of our courses and all of our methods. Okay, so let's talk about Bollinger Bands, because that's basically what everything is going to be determined from. Now, the Bollinger Bands are a very common indicator. Just to give you a brief refresher course, there are 3 bands, all right? Now, the middle band, or the middle line, is simply a 20-period simple moving average. That's all it is. And then it has 2 bands, one on top and one below it, all right? Now, the separation or the difference, the distance they are from that middle moving average is called the deviation. Now, don't ask me to go into detail about all the constructs of the indicator and all the math and the calculations. All we know is that the Bollinger Bands are usually set to a +2 deviation above the middle band and a -2 below the middle band, okay? That's the deviation. They are above and below the middle 20-period moving average. So if we look here at this generic chart, here are the standard settings of the Bollinger Bands as applied to this generic chart. That middle red line is simply a 20-period simple moving average. And then you have the upper and lower bands, and they're set at a deviation of +2 and -2 in relation to that middle Bollinger Band, okay? Now that's the standard setting. We're going to change things a bit. Here are the proprietary settings that, once again, we usually reserve only for students. I want to share them with you and give them to you for free. Now, don't worry if you don't copy these down. I know a lot of students say, hey, Steve, you went a little bit too quick there. Can you go back and tell me what those are? This is being recorded, so you can watch this at your own leisure and copy down these settings whenever you'd like. All right, here are the proprietary settings. You're going to leave the middle band, that's the 20-period simple moving average. We're going to leave it alone. That stays the same. The only thing we're changing are the upper and lower deviations. Remember, they used to be set at 2 or -2. What we're going to do is go down to fractions. We're going to go down to 0.382 for the upper band deviation and -0.382 for the lower band deviation. I know a lot of you are saying, oh, well, this is a Fibonacci strategy. This is the way it was taught to me by my mentor some 4 decades ago. And trust me, I've experimented with different settings, 0.50, 1.26. It doesn't matter. I've experimented with dozens of them. And for my knowledge, after doing that, the ones my mentors taught me seem to work the best for what we're trying to capture here. So you can experiment. Feel free to do that. But the settings we have, the proprietary settings, are down to a fraction, 0.382 and -0.382. This is fairly simply to do whatever platform you're using. It could be TradeStation, MetaStock. Just go into the edit box and edit the Bollinger Band settings. Go from a 2 to 0.382. Should be really simple. If you're having difficulty, contact your tech support at whatever platform you're using. They should be able to do it for you or be able to fix it for you, okay? So as we see here, once again, here are the standard settings, the middle, the top band, the lower band, and now we change them to the proprietary settings. You see the difference, all right? Same chart, but now we have a much smoother flowing, almost like a river type flow to it. This is what's going to help us determine our entry process, which I'm going to be teaching you in just a second, okay? Okay, so let's look at the entry rules first. These are rules for going long, and then I'll show you the rules for going short, which are the exact same thing. We're just going to turn them upside down, all right? Let's take them step by step. And remember, if this seems a little wordy to you or it doesn't make sense, don't worry. Everything is being recorded. You'll be able to watch this over and over again at your own leisure, okay? All right, step 1. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. So we have a blank chart here, and you may think it's overbought, right? It's going up too high. But what we first do is click on our platform. If you're using our platform, it's simple. Click on Strategy 3A. In the drop-down menu, click on Indicator, which is the Bollinger Band. And it's already pre-formatted. There's nothing you have to edit every time you want to use it. There's nothing you have to save and then unsave. It's right there, one click away. In fact, how fast I just shared it with you is probably even slower than what you can do once you have our platform. Okay, so you've plotted this now, right? Step 2. What we want to do is look for 5 consecutive price bars, consecutive in a row, in a series, that close either on or above the highest Bollinger Band, okay? This is step 2. This is how we're going to determine whether we're going to be entering or not. So as we see here, well, we have some closes below, but now we have 1, 2, 3, 4, 5 closes above. Now, I know a lot of you would say, yeah, but Steve, this opened lower and it's kind of touching. It doesn't matter if it's touching. It just has to close above this high Bollinger Band. So you see, you have a total of 5, okay? Now, step 3, what we're going to do is enter to buy when price trades 1 tick. It can be a little bit more if you want. Remember, we want you to experiment with this. As long as you're keeping the basic requirements in play, it's okay if you say, well, Steve, I like to wait for 5 ticks, or maybe 20 cents, or maybe if I'm trading pips, I like to wait for 5 pips. That's fine. But the standard rule is, if it just trades one tick above bar number 5. So in other words, if the high of bar number 5 is 50, well then 1 penny or 1 cent, 50.01. Now you notice here, I say when price trades one tick above. This is where students have trouble, and this is where they lose money and say, hey Steve, this doesn't work, I've tried it. Why? Because they think it has to close there. It does not have to close above bar number 5. If you only want to trade those trades that do, that's fine. But the standard rules are it just has to trade above. So you can very well buy it when it trades above, and then by the end of the day it closes lower. That's still okay. I'll show you a number of examples of that in just a few moments. So as we see here, here is bar number 5. So we want to buy one tick above, right here where we've played this green line, okay? Let's see what happens. Well, the very next bar, it didn't trade there. Here's another problem students have. They say, well, Steve, it didn't trade there, so I didn't buy it. Well, that's your choice. But remember, the rules state that as long as we don't go all the way back down and go below this highest Bollinger Band, you can wait a week, 2 weeks, as long as you want, really. It's up to you. So we waited one day, but look what happened the next day. It traded there. In fact, it actually did close above there. So this is where you would have entered. And quick 115 points, okay? Now, I know a lot of you are saying, wow, this is great, but what I've got now with 150 points, where do I exit? Or where would I place my stop? Because you said not all trades are winners. Those are the things we teach you in the class, in the course. I can't divulge that information now. It wouldn't be fair to the people who have paid hundreds of dollars for this, and then I give away all the rules. It's not fair. But I am giving you a good chunk of the requirements, and these are the entry rules plus the proprietary Bollinger Band setting. All right, let's look at the sell rules, okay? They're basically the same thing, but now we're just going to turn them upside down. For example, step 1, obviously we want to plot the proprietary Bollinger Band setting. So someone would look at this and say, wow, we're really coming out of bed here. Is this major support though? Because it looks like a reversal. We are coming down, we open lower and close towards the high. So that's a reversal in my opinion, and that chat room I went to says that this is bottoming out because there's major support from all the institutions. So this is where students lose money, because where am I basing all my decisions off of? Off of outside sources, off what some guy's saying in a chat room, off what the institutions are doing. Remember, you have to make your own decisions. Don't listen to someone, and you make your decisions based off of the chart in front of you, not off what some guy's saying in a trading room or what somebody's saying on TV. So what is the chart saying in front of us? This is how our platform helps you. Simply go to the Strategy 3A tab, click it on, and in the drop-down menu, click on Indicator. Now, we see price is below the lowest Bollinger Band. So most likely, we don't really have any type of buy setup at all. Let's go to step number 2 now. We want to look for 5 consecutive price bars that close either on or below the lowest Bollinger Band. So as we look back at the chart, we see here 1, 2, 3, 4, 5. Remember, the first 2 bars here are intersecting, and that's okay, but where did they close? They closed below. That's all we care about. A total of 5 bars close below. So that's our setup, and we're going to enter the sell when price trades. Doesn't have to close, but when price trades 1 tick below bar number 5. So as we see, we have 1, 2, 3, 4, 5 bars. Here's bar number 5. So we're not going to sell at the market. We're going to sell once it confirms and trades below here. Okay? So let's see what happened. Well, it took a couple of bars for it to trade there, but ultimately it did, and that's where we entered to sell. Now, you could have bought the puts. You could have shorted the stock. It's entirely up to you. We're not here to tell you how to get in, excuse me, on what market and what variable to get in. That's your choice. If you're an option trader, then buy the puts or buy some spread with a bias to the downside. That's not our job. Our job as educators is simply to highlight and pinpoint for you these high probability setups to go long or short. So once again, as you can see, you would have sold if you traded this using the standard rules, and look what happened. It closed higher. This is another reason why students fail. They say, well, Steve, I sold and it didn't go lower. I sold towards the low and it closed higher, so I got out with a small loss. Well, that's not the rules. The rules don't state that. We teach you where to get out with upwards of 6 or 7 different stop placements. So for all intents and purposes, you still would have been in this trade and potentially could have captured 45 points to the downside. Now, That's if you had stayed and got out at the very low. We're not saying you would have, but remember, in our course, we have upwards of 7 different ways to exit as well. So it's up to you to decide which exit level you want to get out at, all right? Now, as with every market, oftentimes the trend will change. So this is where students say, well, then what do I do now? Well, we just go with the trend. If the trend is down as it is here, but then all of a sudden it says, you know what? I want to go back up. Well, then we are a buyer now. We shift with the market. We're never trying to call a top or a bottom. We're always trying to just go with the market. And once you learn how to listen to the market, you start realizing that all these guys in the trading rooms, all these guys on TV, they're all telling you it will stop here. It won't go any higher, or it's going to go down to this level. This is where you have to buy it. I mean, it's silly. Why not just listen to the market? Because the market tells you just about everything you need to know. So look what happened. It started to shift, came back up into the realm of the Bollinger Bands, and then what happened here? We have 1, 2, 3, 4, 5 closes. They're all above this top Bollinger Band line. What's that telling us? It's telling us that the market is setting up for an upward move. But we can only go long once it trades above bar number 5. Okay, so look what happened. Well, bar number 6 gapped up. So you would have bought here on the opening if you decided to. And you still could have captured 25 points to the upside. So totally, you could have captured upwards of 70 points. Okay, now a lot of people say, well, Steve, that's 70 points if I got out at the very bottom and if I got out at the very top. Okay, I mean, you say that that's very difficult to do. It is. I'm just telling you, you have 70 points to work with. Now, what if you were only able to capture half of that? In other words, what if you sold here and covered here? And what if you bought here and exited here? Well, instead of 70 points, guess what? You only made 35 points. That's still a lot, okay? So we're not saying that you're going to make 70 points with every trade. We're just saying that's how much you have to work with. And wouldn't you love to have a strategy that would say, well, you basically have 25 points to work with here. You have 115 to work with here, as opposed to always losing. This is what consistency means. All right, so let's look at some more current strategy 3A examples. And remember, once again, we're going to focus mainly on stocks. And the majority of these are really to the upside because, as you know, the market has gone up. Once the market finally does turn around and goes down, we don't know when that'll be. Could be next week, could be next year, could be 10 years from now. You obviously have more sell signals. But remember, we don't really care. As traders, you should never care whether it's going up or down. All you should care is that you are in sync with the direction it decides to go. All right, so let's look at our first example here in LAC. Okay, this was coming into January. Looks like we're slowly heading up here, but look at this. Could this be a reversal? Looks like a hammer right there. Maybe we're thinking that it's going to go down. It's a reversal pattern. So you say to yourself, you know what? I'm going to sell or I'm going to get out. Click on strategy 3A, apply the indicator. And where you want to get out, the market's telling you that, well, we're still in a short-term uptrend. In fact, we have a total of 5 closes above. So where you want to say this is a reversal pattern, this is actually setting up to go higher. How much higher, we have no idea. But remember, we buy above bar number 5. So let's see what happened. Well, it took a couple of bars before we finally traded there, and this is where you would have entered, roughly about 12.5, 13. The stock went up 15 points coming into this last week in January. Okay, here's an example to the downside in WEC Energy. This has been going straight down, but maybe you went to that trading room and the guy says, hey, there is major Fibonacci support. We're creating wave 5 now, which will be the last big up move to make new highs. The institutions are buying. The big banks all love this stock, so we've got to buy this before it goes all the way up to 120. Okay. Sound familiar, right? This is the way most of us get our information, based off somebody who really doesn't have any higher level of consistency than someone who just started trading. So why should we listen to them? What is the market telling us? Where everyone says we should be buying this, we click on strategy 3A, apply the indicator, the Bollinger Band setting, which is already pre-formatted for you. And guess what? We are below the lower Bollinger Band. So the short-term trend is down, but we need 5 closes below. And we have 1, 2, 3, 4, 5 closes. Now, does this mean we can go short? No. We have to wait for it to trade 1 tick below bar 5. Because oftentimes you'll see that, well, maybe they're right. Maybe it does go straight. but at least you didn't lose anything because you didn't get in. You have to wait for that confirmation. So it took 2 bars and you finally got in. Now notice we would have sold right here, roughly about 95. And where did it close? Went all the way back up here, like 96, 97. This is where students have difficulty. They say, but Steve, I sold and it closed up. I'm already losing 2 points. I'm already losing money. Well, yeah, that's the way trading is, okay? I mean, imagine any athlete. Does he make a basket with every shot? Imagine every entertainer. Do they have a hit movie or hit album every time they perform? It's just not like that in life, okay? So it doesn't mean you're wrong, though. You have to wait. And it would have been a good idea you did, because coming into the first week in January, 10 points to the downside. Okay, let's look at DQ, all right? Energy, DQ energy. Now, as we can see here, it's been going pretty much straight up. This is where a lot of traders have difficulty. Now, this is not a system, so you're not required to trade it the way some systems require you to do so in order to get the type of results you want. But if you decided to do so, well, what do we have here? 5 closes, 1, 2, 3, 4, 5 above. Here's bar number 5. You would have entered it on the very next day, and 35 points coming into this last week, okay? So a lot of times, we don't catch these moves because we get in our own way. We're frightened. We think it's overbought. We think it's, come to some type of resistance level. Let's look at LMT, okay, Lockheed Martin. This kind of looks like it's going sideways, but we have a total of 5 closes below. 1, 2, 3, 4, 5. Remember, don't get confused and you say, well, Steve, but they're touching here. They opened and it doesn't matter if they're touching. Remember, the rules state that we want 5 consecutive closes below the lower Bollinger Band. It doesn't say that they can't touch the Bollinger Band. So we have 1, 2, 3, 4, 5. So this means we can sell this, but not at the market, only if it trades 1 tick below bar number 5. And we were lucky enough, we got short the very next day, and LMT dropped 25 points coming into this past week or so. Here's an example in ALB, okay? All right, looking at this, let me just see here. Oops, kind of jumped the gun there. Had the wrong slide. Here's where we are. We would have entered right here. There's the quick 35 points, all right? This just happened a couple of weeks ago. This is what we mean by these big moves. Another example here where you would have purchased it on bar number 5, 1, 2, 3, 4, 5 right there, okay? You would have purchased it, and for 1, 2, 3, 4 days, you would have had a loss. This is where students say, Steve, this is wrong. I'm going to exit this because I have a loss here. Remember, you have a number of different stop placements. Depending on which stop placement you use, most likely you'd still be in this trade. And if you only had to deal with 4 days of minor down, look what happened if you just simply waited. There's 35 points to the upside. Let's look at an example here in NOC, okay, Northrop Grumman. This is a stock I used to actually trade on the floor of the exchange. We have a total of 1, 2, 3, 4, 5 closes. Now, this is why you don't sell short at the market on bar number 5. Because if you'd sold, look what happened the next day. Now, most students would say, gosh, Steve, I sold and it's up today. I'm getting killed. I'm going to exit. And they take a loss. And then I look at their work. I say, well, remember, the rules are it has to trade below bar number 5. You got in prior to that. And then you scared yourself and you exited. This is why I say no 2 traders should ever trade alike, because everyone trades differently. You get scared. Other traders may say, well, I know I got in too early, but I'll just wait. Well, if you wait for the standard rules, you would have waited a couple of days and ultimately gotten short right here, and 35 points coming in to the end of that month. Now, let's look at a price stock, because I know a lot of you say, well, Steve, I've seen some $300 stocks here. I can't afford that. Well, let's look at GEVO. This just happened the last couple of weeks. This was a $2 stock, okay? Nothing changes because we're looking at an inexpensive price stock. We still plot the Bollinger Bands. We have 1, 2, 3, 4, 5 closes. Here's bar number 5. There's where you would have bought on the 21st of December, just about a month ago, okay? And roughly you would have bought at $2.50. Look what happened coming into this past week. It went up 9 points, okay? Now, I know a lot of you say, well, Steve, 9 points, that's not a really big move, but that's 200% in 3 weeks. Imagine if you gained 200% in Google in 3 weeks. Okay, so it's all relative. You could have purchased thousands of shares at 2.5 and either held on to them or gotten out. But this is a big move. It's a big move either way. If it's a $2 stock, or if it's an expensive stock like Tesla. For example, this is the first slide we shared with you at the opening of the presentation in Tesla. Remember where you thought, well, it's a little bit too overbought for me. That guy in the trading room says I shouldn't buy it here. It's probably going to come down. Remember, it had gone up too quickly. You were interested in it, but you're going to wait a little bit. Well, let's apply and see what the market's telling us. On our platform, click on Strategy 3A. In the drop-down menu, click on Indicator. And price was below. We had 1, 2, 3, 4, 5 below. We would have gotten short, but it never traded below. This is why we wait for it to trade below. So since it didn't trade below, look what happened on the very next bar. It went above. So all bets are off on the short side. And on top of that, if you waited, 1, 2, 3, 4, 5 closes above. So according to the rule, we're not going to buy at the market. We're going to buy when it trades 1 tick above this bar right here. Okay. On the very next bar, we would have purchased right here in the opening. Now, a lot of you say, how can I buy? This thing has gone straight up for the past week. Well, remember, it's your choice. The first thing I said is you have to make your own decision. If you don't feel comfortable, that's fine. But remember, that should be your decision based on the rules and based on your temperament. It shouldn't be your decision based off what some guy's saying in the chat room or what some guy's saying in a webinar. It should be your decision based off of the rules that you've taught yourself and you've learned. And you just say to yourself, you know what, I don't feel comfortable buying that far up. That's fine. But if you're willing to take on this trade, well, that would have been a great idea. 350 points in 1 month, potentially you could have captured. We've all seen Tesla. Now, just a few examples of some other markets, forex, E-mini, and Bitcoin, because I know some of you don't just trade stocks. So let's look at a really nice trade here in the euro dollar. This was just this last week in the euro dollar, a 1-hour chart. 70 pips to the downside. The same process is applied. We have 1, 2, 3, 4, 5 closes below. We waited for price to trade there. It did. It didn't close, but you still should have sold if you're trading this. And in a couple of days, you made 70 pips, or roughly about $700 per unit. How about this example in the E-mini futures? Here's a 15-minute chart, a 15-minute chart of the E-mini futures. Okay, this was on the 20th of January coming in. We see here 5 closes above, 1, 2, 3, 4, 5 closes above. There's your entry point right there. And had you held on for the next day or so, look at that. You've got basically 50 points or $2,500 per contract if you held on. Now remember, we're not saying you would have. Some people would have gotten out maybe right here with maybe a 3 or 4 point gain. Maybe someone took a 10-point gain right here. It's up to you. But that's what matters. You have to make your own trading decisions. And then lastly, let's look at Bitcoin. Same process applies. First thing we want to do is apply, even though you may think, well, there was resistance here, this was in December, you want to apply the indicator on our platform. Click on the indicator, and guess what? We have 1, 2, 3, 4, 5 closes above. That's a buy signal. So for all the people who say, boy, this Bitcoin took off, how did you know? I mean, I really don't understand it. I don't follow it. So how would anyone know how to trade that? Well, we don't look at fundamental news. We really don't care what it's based off of. It doesn't matter if you understand it at all, because patterns will generate themselves over and over again. And all we're trading is the pattern here, because the pattern is coming from the market. And the market's telling us whether it wants to go higher or lower. So that's the only thing we care about, the only thing we listen to. So here's bar number 5. 1 tick above bar number 5, we would have entered right here on the 19th of December. And we all know what's happened with Bitcoin after that, right? Okay, so let's recap before we go to question and answer portion. Remember, this is a continuation method that does this by applying a unique Bollinger Band setting that you all have now. It's designed to trade these quick, powerful trends that can be applied to virtually any market, any time frame, in any direction. If you're going to be trading this next week, please paper trade first. This is required of all of our students in specialist trading. Even when they get the full rules, we don't tell them to just jump in and start trading. You have to paper trade. Our edge is consistency, meaning there is an awareness you will have losses from time to time. that's okay. What we're looking for is a two-step forward, one-step back approach. Now, ask yourself, do you think this strategy could have helped yourself trading this past year? Okay, think of 2020. Did you have a good year trading? Most of you, I'm sure, did not reach the goals and all of the real lofty requirements that you set for yourself. Can this help you? I think your answer is yes. So we have a great special offer for all of you attending today and for all of you wanting to learn from specialist trading. We're going to offer you our Strategy 3A course. Okay, you're going to get all the full rules. This is our premier continuation course, which uses the Bollinger Band. You're going to not only get the standard entry, but dozens of different ways to enter it, as well as all the entries, exits, and stops, including all those all together. You have dozens of different ways to trade it. Remember, you'll also get educational correspondence. My email address, you can email me whenever you like with questions, but we're not going to stop there. We're going to also throw in a completely different strategy. You're going to get two strategies. This is strategy number one. I've talked about it before. This is our premier pullback method. Now, remember before we were talking about a continuation method where we look for a trend to be established? This is entirely different. If you like to buy at lower levels, and if you like to sell to go short at higher levels, this is the perfect strategy for you, because what it does is it determines if the overall trend is up, and then it looks to buy on these sell-offs in the overall trend. As well, it looks to see if the overall trend is down, and then it looks to sell when there's a little rally or a bounce in the overall trend. For example, here is an older chart of the spiders. Someone would automatically say, well, this is in a downtrend, Steve, so you've always said listen to the market, go with it. If it's in a downtrend, I should either avoid it or sell it, right? Well, according to strategy number one, this was just a sell-off in an overall uptrend. So rather than view it as something to avoid or to short, this is actually a buying opportunity. And according to the rules, it generated a buy signal right there at the very bottom. And look what happened. Right after that, spiders went up a quick 8 points, which represented roughly close to 700 Dow Jones points, okay? So we're going to give you all the complete rules, tell you exactly how to trade this. Once again, when we first started applying this to our educational programs here, we basically used it for stocks. This was one of the first methods I was taught on the floor of the exchange, which I used for stocks. But as usual, our students told us, Steve, I applied this for futures, for currency pairs, for commodities. It worked great. So don't get fooled by the stock strategy promo title there. It can be applied to any market, any time frame, any direction. So you have two full-fledged strategies based entirely off different parameters. We're going to go forward. We're going to throw in some extra bonuses, all right? In fact, 7 Saturday morning bonuses. You're going to get the add-ons. That's going to automatically give you the buy and sell signals on TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, or our platform. Automatically thrown in, okay? You'll get a 3-hour video seminar. That's our Secrets of a Stock Exchange Specialist. You'll also get the PDF version of my book. I wrote a book years ago which really went into detail on trading through the crash of '87, almost a hand-by-hand account of what my trading was like during the Black Monday of the crash of '87. You'll get that PDF version. 6 months of our PTS Primo charting platform. Secrets 2.0 course, which takes it up to the next level for really high-level trading and different edges and different techniques. You get the scanners for the PTS Primo charts to identify strategy setups, as well as the multi-scanner. So you get 7 of these Saturday morning bonuses. As you can see the prices on the right. These are really valued, anywhere from $99 all the way up to close to $2,000. We're going to throw these in, but the 6 months of our PTS Primo charting platform is worth its weight in gold. Why? Because including what you're seeing here, you're also getting all these extra added bonuses. Remember, everything is one click away. You're getting 44 years of trading experience and knowledge all right there in front of you. One-click access. For example, you'll see here, these are some of the things you'll get that are included. They're just the tip of the iceberg. A strength of trend tool, our scanners, our enhanced buy-sell line that tells you what the overall trend is. Top-bottom 25% tool, a great tool to tell you what the short-term trend is. Auto-generated exit levels, one of our exit techniques automatically generated on the platform. And this all comes with personalized tech support. So this is just a fantastic Saturday morning special offer. Remember, this is all included with the platform. This is really our pride and joy, because I developed this with Pro Trader Strategies. And as I said, it has 4 decades of information right there, one click away for you. So let's break this down. All right. You're getting strategy 3A, strategy number 1, entirely different rules, entirely different parameters, along with those 7 bonuses and 6 months of the platform entirely free. Now, our Saturday morning discount, usually if you purchased all of these things separately, it would cost you over $7,200. We're going to give you a great discount today. You're going to be saving upwards of $69,000, almost $7,000. We're only going to charge you $297. That's a fantastic discount for all this information. Things that have taken me a lifetime to accumulate, you're going to have for less than $300, okay? So take advantage of this. If you're still not convinced, look at this example right here in the Dow. This is a current chart of the Dow on our platform, okay? Using just the entry technique, which I taught you today, look what happened in November. Right here we had 1, 2, 3, 4, 5 closes above. Here's bar number 5. You could have entered right here on the 16th of November. And if you wanted to, you would still be long the Dow, thinking we're in an uptrend, because the Dow has already gone up 1,600 points in just 2 months, just using this technique, okay? You're also getting another strategy as well as all the information applied on the platform. This is a phenomenal way to really take your trading to the next level. A year from today, you will have wished you became a member of these courses. Invest in yourself for such a small price, less than $300. You can have this at your fingertips. Here's how to take advantage of it. I would personally suggest contacting Pro Trader Strategies by giving them a call. Their email address is right there, but I would really strongly suggest calling them at 310-598-6677. Trading consultants are manning the phones right now. They would be more than happy to take your order over the phone, or if you have a question about tech support or the platform or these strategies, they would be more than happy to answer any question you may have. They're there to answer questions. There's absolutely no obligation. If you don't want to purchase anything, you don't have to. You can find out more for yourself. But please remember, this is a limited time offer. Most likely it'll be over by sometime next week. And if you see this again, maybe 2 weeks later, you say, hey, you know what? I'm going to watch that video again. And you realize you've lost so much more money in 2 weeks. You decide to take advantage of this. Well, it might be all the way up there to $7,000 again. So you don't want to miss this. So if you're truly interested, contact Pro Trader Strategies ASAP, and they will be sure to reserve your spot, and you can take advantage of that really deep discounted price, okay? Now, that link you see at the very bottom is the link that will take you to the information page, and if you'd like to sign up online, you can use that link. And actually, we just, let me just see here, we just posted a link right there live online, so you can go to the chat box and see that there. Now, I'm going to answer your questions. If you have any questions, just go to the question and answer box, and I promise I'll get to them in the order they were presented. Someone is asking, does this work on intraday trading? Yes, it does. Now, I didn't show any examples of stock intraday trading, but if you get a really nice run, let's say like an Apple or a Tesla on a 5 or 10 minute chart, it will generate the same type of signals using the same rules. In other words, there is nothing you have to change if you're looking at a 5-minute chart of Tesla or if you're looking at a monthly chart of Bitcoin. All right? Absolutely nothing changes. The rules stay the same. Same if you're buying or selling. So yes, if you're an intraday trader, I really didn't show any intraday examples of stock trading, but we have tons of students who use it that way, okay? How long does this offer last? Well, I think I just stated it'll probably be going on to early next week, maybe Monday or Tuesday, and then it's dissolved. So most likely you would have to take advantage before that. What I suggest is we're going to send you this video. I would watch the video, 2 or 3 times over the weekend. If you really are serious about it and you think that this is worth its weight in gold, which I really believe it is, give them a call Monday morning. They would be more than happy to take your offer. And on top of that, you'll be up and running as soon as Monday. You can have the platform, you can have the strategies, you can start learning the rules, and you'll have my email address. That goes to the next question. Someone said, what do you mean by educational correspondence? Okay. We know that the best way to educate students around the world is basically by having someone mentor them personally, either online or in the old days, we used to be able to actually see you face to face when you come to the office or something. But because of the COVID restrictions now, because we have students around the world in over 115 countries, our educational correspondence is strictly through email. So what you get is my personal email address reserved just for students, and you can contact me whenever you'd like. All right. Perfect example. I was answering a student's email question today prior to this presentation. I'm answering emails all the time in the weekends, in the middle of the night, during the day. So trust me, if you're learning how to trade strategy 3A, or if you're got that down and you say, Steve, I need a little more help with strategy 1, I always say, listen, send me the snapshots. I'll go over your examples and we can work through them together, and I'll correspond with you via email, okay? So it's like you're having your own personal mentor there, and you can contact me whenever you like. Someone is asking, does this expire after 6 months? No. You can, ask me emails as long as I'm trading, as long as I'm still around. I'll always be your mentor, okay? So this is nothing that you have to worry about that expires after a certain amount of time. All right, good questions. As we get ready to end the presentation, I just want to say thank you so much for attending. Please, if you're at all interested, contact Pro Trader Strategies. Once again, there's absolutely no obligation. They would be more than happy to answer any questions you may have. I would really strongly suggest calling them at 310-598-6677. So as we close here for our Saturday presentation, thank you once again for attending. Take one last look at our disclaimer. And most of all, I really look forward to all of you becoming students of mine in the Strategy 3A course. Thank you so much for attending our course. Have a great day and best of luck in trading.